Thanks everybody for showing up at our northern location. This is good. It's quite the crowd. Hope everybody enjoyed themselves. I want to thank Rich, who's right here, for setting this up for us and so on. All right. So as usual, I'm going to spend the first 10 or 15 minutes talking about administrative items and whatnot. So what's happened since the last meeting. Then I'm going to give things over to CC, who, there he is, he keeps moving on. And do his presentation, which is a nice presentation on some updates to GTAA that he's done. And then I'll turn it over to John, who I think is sitting over here, who's up there, who's going to talk about asymmetric timers. And then, luckily we can go, if we want to 9 o'clock, and we can have some informal chats and so on. So, administrative items. So the April meeting will be on April 36th, also known as May 6th. There was nothing, absolutely no library, whatever, that I could get. And so we'll meet at the Saratoga Library on the 6th of May for our next meeting, and we'll call that the April meeting, by definition. Now the May meeting, myself and Joe back there, are trying to line things up so that Scott Judds is going to be down here on the 19th or the 20th, and he's willing to give a talk. And so Joe and I got together and said, hey, let's just have one big combined sector server user group CINI meeting, and feature Scott, okay? And he's kind enough to do that. Rich, again, is being kind enough to see whether his schedule matches up with the schedules here in terms of holding it here. That would be very nice again. Same sort of deal where you can come early for dinner or show up just for Scott. If that doesn't happen, we'll probably do it at the Holders Country Inn because we've done that. That's where we've done it before when Scott's come down. I will make a note that the last time Scott went down to LA within the last 6 months, and he managed to get 200 type people attending a session out of AAII down there. So he's getting to be more and more popular. Let's see. Next up. Upcoming events. The Silicon Valley chapter has a global outlook session coming up. I think everybody, if you haven't gotten the flyer already, you should have. If you haven't, you can register online at the URL that's up there. The next CTAG meeting is next Wednesday at Holders Country Inn. Joe, the next Sector Surfer User Group meeting, is it in May or is it one in March?
March is a week from Wednesday.
A week from Wednesday?
Yeah, in other words, the third Wednesday of this month we'll have Sector Surfer.
Okay, so I will update my slides to correct that. Basically, it is Holders Country Inn on March.
Exactly.
So it's this date, right here. Silicon Valley Options Group, I believe they have a meeting next Thursday. I'm not sure what they're doing.
It's on taxes.
It's on taxes?
Taxes for investors, how to do with various aspects of taxes for from investing standpoint.
Okay, fantastic.
Traders,
yes.
Traders taxes? Okay, great. We've done one of those sessions. I think Mike Bailey did a session on that last year. And in fact, some combination of Mike and I use trade log for all the trades we do. So, let's see, Vector Vest. The next meeting they have is Wednesday, March 26th in the Milpitas Library. Okay, if you want to attend that. About it. All these, slides will be at our website. So, you can go there and download them. In fact, they're already at Dropbox if you want to go there and grab them and view them locally. User presentations. Basically, there's a couple of things coming up. A few items were removed from this because of the presentations we made tonight. And what's coming up in April is I've been doing some work on the double EMA scheme that we've been talking about, and tuning it across various different indexes and mutual funds and so on to see what I can get out of it. And then there's a portfolio optimization program that actually does a pretty good job overall. It was actually featured in an AAII article about a year ago, and it's at their spreadsheet download center. And I've been going back and forth with the guy on it for a while. So if there's other people who want to raise their hand and do something, it's better there's other people up here talking rather than me. Okay, so. All right, presentations and so on. We don't do anything by paper. You go to the Yahoo CIMI group site, you sign up, and you get automatic entry. And there's a pointer there to Dropbox where we have all our presentations. Okay, so it's all downloaded if you want. And there's in blue, there's and above it, there's the actual URL that you can work on. If you need these, see me. I've got a limited number of hard pieces of hard copy that I can give you to give you the links. All right, since the last meeting. So in a side conversation with some people, it was suggested we track a few indicators about market health and timers and whatnot, and you'll see that in a second. I believe last month John gave a presentation on Faber's implementation of an F-squared type algorithm. We'll see that in a second. And in the last month or so, there's been a number of postings on the board that might be interesting. So there is a video out there by Novi Marks on the Novi Marks algorithm, or the other side of value algorithm that we've been covering in the past. So you can go out there, it's posted, and you can hear the words from the man himself. Okay, so that's pretty interesting. I believe John posted some information and files on what was it, a rolling 5-year performance window of how an algorithm does, because algorithms outperform in some time periods and underperform in another, and that's one way you can kind of see how your algorithm is doing over time. We had some discussion about, and this was created by, or initiated by some comments and some studies that John did a couple, 3 months ago, about GTAA not being the best benchmark for multi-asset allocators. In fact, it's the worst possible benchmark, okay? And so we had a bit of a conversation. And one of the things that's interesting on that is some people did some work with Sector Surfer. And it's interesting to see what happened when you ran Sector Surfer in full optimization mode versus walk forward mode. Big difference in the performance, okay? And so that just drives home the idea that, yeah, use walk forward mode because the world can change if you do it like you would do it for real. There's some articles from Mark Holbert on sector algorithms and how they did last year. So they're interesting. They use some of the same instruments we do, and he's comparing how various professionals did, money managers and newsletters. And also related to this is lots of people use Holbert as a reference in terms of, they buy his newsletter once every couple of years to see how they're doing. There's also various people I've talked to that want to know the history of a particular newsletter. Well, he has a service called Holbert Interactive, where essentially that's his database of all the newsletters he's got, and you can get on there for a fairly cheap price. Okay, so if you want to look at all his newsletters and such, there's a link in there to get you to that, and you can go in there and have fun and take a look at all newsletter predictions since Holbert's been in business, which I think is sometime during the early 80s. There's some articles on ideology investments, basically saying, prompting an idea of be mechanically in your investments and don't let your politics influence you too much. And then a very interesting study by Darwin Investments Groups, these are the Macquarie people. They looked at the Faber algorithm, and they looked at trading it yearly, they looked at trading it monthly, they looked at trading every day within the month. They did their normal, very thorough job, okay? And so if you're, this seems to fit in well with CC's discussion and presentation tonight. So if you're interested in it, it's a very readable article as it usually is, but they're very thorough. Okay. Market health indicators. This is, I just put a few of them up here because people asked about it in various ways. Yes, sir. Thank you. Sorry. I'll have to pop back and forth to hit the energy. The various indicators, 10-month SMA on the SPY is long. Storm guard for you sector surfer type people, long. There's a NASDAQ timer where you take the NASDAQ new highs minus the new NASDAQ new lows, long. The trailing 60-day volatility on the SPY, okay, that's 75 basis points. The cutoff is 1% to start taking things down. The TED spread, this is essentially a measure of credit crunch. You worry about it. This got to be around 4% during 2009 when everybody was frozen, credit was frozen. Right now it's at 18 basis points, nothing to worry about. And believe it or not, the Federal Reserve, Fed, has a recession predictor indicator, okay, that's actually historically quite good. So you can just go there and figure out what the Fed thinks is happening with regards to a recession. And right now that's a little over 1%, and if it's below 10%, you don't need to worry about it. So bottom line, since this is brand new, market's hitting new highs, there's nothing to worry about as of today. There'll be more fun stuff to worry about in the future. Excuse me. This is a slide I stole from John's presentation from last month. This is work he did with regard to modeling Faber's F-squared tracking or algorithm in terms of how you do investments. The stats are all over here. The blue line obviously is the one you want to be on. That's the algorithm that John modeled and Faber suggested. I have a tracking folio for this, and surprise, surprise, right now this trades once a month, and right now it's in all 9 sector funds. Okay, so nothing too surprising right now. And
question?
Yes, sir.
Al, do you fractionate the percentages in line with the S&P 500, or do you do equal weight, or what do you?
It's the algorithm is to do equal weight in 30 seconds or less if the sector's above its 200-day, you're in. If there's 4 or more sectors that are in or long, you equal weight them. When you go below 4 sectors, you start to add cash. So for example, when you go to 3 sectors, you have 75% stock position, 25% in incentive fund, 25% in cash. 2, you have be 50-50, 1, you be 25 stock, 75% cash. 0, you're totally in cash. So it's got a built-in timer if you, I think I got that right. Correct me if I'm wrong, John. So that's the basic algorithm. This is how it's been doing. You can't see it. There's a very light blue line up here. That's a SPY, and that's the algorithm. It's doing the same as a SPY. Okay, that's because it's been long all this time, right? It's also got a whole whopping, maybe 4 weeks on it at this point, so it's not statistically, accurate or whatever. Okay, so at this point, that was it for the, overview, and now on